Hey traders, checking in on the stock market today. Day number 3 in a row with a higher open and bears controlling the entirety of the day with the real volume, which we talked about yesterday. We're going to look at a trade review on BBIG. We're going to check in on the uranium sector very briefly. And we're going to look at a potential Chinese news event that we need to be paying attention to for the possibility that it becomes a black swan event. So let's start off with the potential exposure out of China for the broader markets in general and global markets. So I posted a tweet. It is not my tweet. This has been going on for a couple of weeks at this point, and it is from Adam Kochran. And I suggest reading this. It's 31 tweets long. It is worthwhile. It's something we need to be paying attention to. Essentially, it's Evergrande. I like to pronounce it Evergrande. But Evergrande, big time company in China, and it is at risk of going under. 500 billion of assets, comparable to Lehman Brothers, 600 billion back in 2008, and the potential ripple effects that it would have on the global economy, not only massive impact on China's economy, but the global economy. Essentially, at this point, the market is pricing in that China's going to step in and bail them out and prevent this collapse from happening. The black swan event, in my opinion, would be if China says, no, we're not helping. And then everybody would be very shocked, and that would cause a major fear event if that would happen. So keep an eye out on these headlines. Again, familiarize yourself with this information and just be aware of it and watch what is China going to do in relation with this company and how are they going to fix this mess, essentially is what it boils down to. So again, something we want to be paying attention to. BlackRock has some exposure. If it were to go under, it would impact BlackRock and has to do with property. So SPY, third day in a row, higher open. Bears in complete control. And we had the bullish reaction to CPI numbers. And this is what I'm talking about, real volume. This is a perfect example. Look at the amount of dollar volume that was required to make this move up. We're talking, we'll call it 500,000 shares to move the price from 446.30 to 448.30. 500,000 shares for a $2 move. The same $2 drop back down. Look at how many shares trade. 1.3, 2 million, 2.7, 3.4, 4.6. 4.6 million. We're talking 800% more volume in the same amount of price, which is why when I'm talking about the market, extended hours, it takes a tiny bit of dollar volume to move the price significantly. During regular trading hours, that's when the real volume is at play. Fake volume on the way up. I won't call it fake volume, but tiny volume on the way up. And real volume on the way down. We then had an hourly bounce, and that just led to lower lows. Bears controlled the entirety of the day today. Look at the 15-minute time frame. You can't have a more confident downtrend where every bounce is just setting a lower high. What I am watching for at this point to indicate a temporary shift in momentum is a gap down. Look at the previous drops. What marked our bottoms? We had a gap down here that marked a bottom, gap down, gap down, gap down. So I'm watching for a gap down before we even see short-term shifts. And I'm not going to say that, if we gap down and bounce that it's over and the bulls are back in complete control, because again, at that point, we then have to be cautious of a confirmed daily downtrend as a possible scenario. But as far as shifting the short term, that's what I'm watching for, a gap down open. So the S&P 500 futures chart, the 12-hour uptrend line, we're right there. And again, with trend lines, why I don't love them is you can always just tweak it a tiny bit this way, a tiny bit that way, and have, shape things the way that your bias wants. So I could drop that down. I got the wrong tool, but you get the idea. So that's one line of defense that we're watching. Lori is watching the 50-day moving average that is now in play, and I am watching the SPY weekly EMA 12, which we are still above. That's down at about 440 if we were to touch it. So a couple levels in play right now, and the one thing that's notable to me is on this drop, again, we're not seeing extreme fear in the sense that the previous drops were faster and harder. The 4-hour RSI is not down at those bounce levels from the previous examples, and neither is the 12-hour RSI. If we were to gap down open in SPY tomorrow, those RSI levels would start to be approaching the previous bounce points. So bears have complete short-term control, and keeping an eye on that. Hourly, just looking for a lower high on this current bounce. So who was the weak sector today? It was the financial sector. After being the strongest bull yesterday, they were easily the weakest bull, the biggest bear today. Bearish engulfing candle and confirming a daily downtrend. We've been in an uptrend at this point, higher low. We broke resistance straight into a support break. So that is a confirmed daily downtrend to me. That's a lower high and lower low. 37.22 is now our weekly higher low of support. And what stands out to me is a monthly bull flag confirmed with zero follow through. So the financial sector bears running the show today, and it's all about 37.22 to see if the weekly uptrend is going to be lost. Healthcare has been the weakest sector previously over the last few days. Daily inside bar today, bulls not proving a thing. Lower high every day for the last 6 days. That pattern has to break if we're going to see any bounce. We're on the verge of a bear cross of the daily EMA 12 and 26 for the first time since the bull cross took place 6 months ago. That is a notable shift. Monthly consolidation appears to be shaping up in the healthcare sector. QQQ is still holding on just fine. So that's what I'm watching closely. Is QQQ going to start seeing some fear? I'm looking at support of 371.97. If that level holds, I still consider this a daily uptrend. Today was an inside bar, and the bulls have to confirm hourly trend changes back in their favor for any kind of daily bounces to take place. So QQQ is the glue holding things together right now, while XLV and XLF are weaker. And again, as I pointed out many times recently, we've got double tops everywhere. We've got double top at the all-time high on QQQ, XLV, and XLF. SMH correlates with QQQ, so it is one of our stronger sectors. It's hit all-time highs 2 out of the last 3 days. Granted, we're not getting any follow-through, but we're positioned well in the semiconductor sector, where if the broader market bulls are able to shift short-term momentum, SMH is right up here at all-time highs and still holding some daily higher lows. We just set a new higher low at 270.83. If the broader market rolls over, then obviously we're going to drop with it. But we're not seeing fear in the broader market. We've seen pullback, and again, there's a stutter. Again, I would say that the previous times were more fearful, just in the sense that the drops were faster and harder. And this is more of a stair-stepping our way down on the hourly. So yes, people are obviously aware that we're consolidating, and people are holding their breath a little bit, but it's not fear. We're not seeing all of our sectors drop at the same time. We're not seeing that big red day where SPY's down 1.5% and QQQ's down 2% and XLF's down 1.3%. We're not seeing that kind of day at this point. So I'm keeping an eye out for that as well. That would obviously shift perspective significantly if that were to happen from here. Because fear coming right off of all-time highs is different than if fear were to show up after a week of consolidation. So bears still have complete short-term control. And again, watching the pattern of higher opens. Just as an example for SPY today, SPY gave us that higher open on the CPI reaction. And I was live streaming pre-market. All I was just saying was, if this level of 447.68 breaks when the bell rings, it's essentially the same thing over again. It's bears controlling the open. And as soon as that level breaks, it's a 5-minute downtrend confirmed, and the bears absolutely controlled the next hour of trading. So I do have some bear exposure in swing position as far as a hedge. I don't have nearly as much long exposure as I have in the past. Right now I've just got my SPY no-touch position from the COVID dump. So I do have SPXS that is hedging that, and added a little bit on this 15-minute lower high and swung a little bit more. And again, I'm just keeping an eye out for a gap down open. Looking at the dollar. So anybody that's looking at commodities wants to see the dollar confirm a head and shoulders pattern on the weekly time frame, which means failing to break the high of 93.73 and then dropping down to break support of 91.94. That would be a great sign for commodities bulls. We have a daily range right now that is pretty much a bull break with zero follow through and a bear break with zero follow through. Pretty much a double top and double bottom. And we're keeping an eye on that because if it convincingly breaks bear, that's our weekly lower high being set. We had a bearish reaction to the CPI numbers and then a big time bounce. So look at the bounce on the dollar, V-shape right back to where we came from. And we know there's an inverse relationship between the dollar and commodities in general, but it's stronger in the metals. But look at gold. This is gold on the hourly, nowhere near inverse to what the dollar did. Inverse as the dollar dumped, and then a bull flag on the hourly while the dollar V-shaped. If we were tick for tick inverse, gold would be back down here right now. So that stands out as very favorable for the gold bulls who are trying. We had a little bear break with zero follow through. The gold bulls are trying to set up a weekly higher low here and a weekly inverse head and shoulders. So if the dollar confirms the head and shoulders, then gold is going to confirm this inverse head and shoulders and confirm the first weekly uptrend that we've seen in a while. So keep an eye on gold bulls, and aggressive bulls are using this low now as a stop and saying, okay, my stop's going under 166.70. If that level breaks, then a weekly equilibrium becomes the most likely scenario. But if that level holds, it favors a weekly trend change. And silver is trying for a weekly higher low as well. It's a bit weaker than gold. And again, you can look at the XAU, XAG chart as a comparison. And right now it's trying to be a weekly bull flag. And when this chart's going up, it means gold is stronger than silver. And we can convincingly say for the past bunch of months, gold has been stronger than silver. Really, it started shaping up in July with this breakout from the sideways range. So trade review on BBIG. Honestly, I haven't watched BBIG trade much. There's been, members have been on top of it and requesting it and watching the breakout. And we saw a big time dump today. And I just happened to look at it at the right time. When you look at a name like this that's dropping so significantly and hourly RSI got down into the teens and the 15-minute RSI dropped down into the teens initially as well. If I had been watching this name from the open saying, I'm looking for a bounce on BBIG today, I would have tried a bounce earlier than I did, and I would have stopped out. And that's because I would have been playing based off of RSI because there's no real support levels nearby where we were dropping. I probably would have tried a daily EMA 12 and failed. So this is a successful bounce that honestly has a lot to do with the timing of when I looked at it. Because I looked at BBIG for the first time today right after 11. And I said, okay, the hourly RSI is in the teens at that point. And again, you can see here it only hit 21, but when we were at the low of that candle, it was down in the teens. And the 15-minute RSI, when I'm playing oversold bounces, I want as many time frames crushed as possible because I know that if I'm too early for the hourly bounce, if the 5 and 15-minute RSI are crushed, I'll at least get a little short-term bounce that I can play around in and maneuver around and sell partial positions and drop my break even. So 15-minute RSI was down in the low teens, and that's why I was interested. And so we were then watching, and a volume climax presented itself. This on the 5-minute time frame, flushing $8 was a volume climax. And just looking at the chat that I was having with John's charts, just some bros talking trading. BBIG hourly and 15-minute RSI getting extreme, scouting a bounce. That was at 11:28 a.m. This is the 2-minute time frame, and at 11:28, it was a 2-minute bear flag forming. So I'm scouting a bounce. I then see that flush and that volume. And again, it's the highest 2-minute volume of the day at that point. And I said, okay, that gets me interested. And John was interested too. He said, climax, said possible. 2-minute EMA 12 was a brick wall at that point. Every single bounce rejected from it. Let's look at that real quick. So again, look at all these bounces. Reject, reject, reject. There's our climax. So 763 support. I was looking back at a previous level. And I said in on 1-minute higher low at 790. So at that point in time, I saw the bounce. I said, okay, big volume. And I'm going to enter with a higher low. And I'm looking at 777 support. And I'm going to make my first entry scaling in and make it at that 790 level. Because I know we need a 1-minute trend change if we're going to see a 15-minute bounce. A 1-minute trend change is baby step number 1 for that. So in at 790, and I then instantly zoom out and watch the 2-minute EMA 12, and that is my target to exit half of my position. Why? Because if I am wrong on this bounce, we will reject from the 2-minute EMA 12 and we'll drop to a new low of the day. So if I sell half of my position there, my break even goes from, and I sold when $8 broke. So in at 790, out half at 8. My break even is now 780. So I have tiny risk on this trade as my break even is just above the low of the day. And again, if I'm preparing to be wrong, if I'm wrong, we would reject from the EMA 12 and break 777 support, and I would have a small loss. If I'm right, I'm looking for an hourly oversold bounce. So John got in there as well. Out half at 2-minute EMA 12, 780 break even. Target is 850 plus for the hourly oversold bounce for the remaining half, and my stop is under the low of the day with a little bit of wiggle room. And then the bulls just took off. It was a mini short squeeze with the speed at which we V-shaped bounced here. And again, looking on the 5-minute time frame, we just completely made back all of the losses of the previous hour in a half-hour bounce. So I was seeing the speed of that bounce. I was just scaling out. I exited a quarter of my position, maybe in the 830s. I exited the final position on the bull break over 850, and that was that. Locked in a solid win on the day on that bull move. And then I tried to short it. I pulled up my broker to see if I could, and Fidelity didn't have any shorts available, but I would have shorted, and I don't have the conversation, but I was highlighting the 1-minute volume climax on the psychological $9 break and watching for that to be a top signal for bears to be looking at an entry on. And again, look at the volume telling us things. Volume climaxes. The highest 2-minute volume of the day up to that point was the bottom, and then the highest 2-minute volume of the day to that point was the top. So we know we're crushed to the downside, and it's the volume climax that helps us find that bounce. And look at the previous climaxes. They led to a bounce every time. It wasn't the bottom, but that's what I'm talking about when I'm saying, if the short-term RSI is crushed, I can maneuver around there. That's a 3% bounce that I can exit half of my position, and if I would have been wrong, it's a small loss. So the volume climaxes were really good at marking temporary little bounces. And then it marked the top. CCJ, uranium sector. So I wanted to put out a video on the uranium sector last week, but I felt it was too overextended. And I'm a lot more comfortable putting out a video and bringing people's attention to it when it's consolidating. And I will look to do a video potentially this weekend looking at the uranium sector and a bunch of names in it. Because again, the last thing I want to do is post a video when it's breaking out, and I will tell, no matter what I say, someone's just going to FOMO in and buy at the top, which obviously I don't want to happen. So daily consolidation is now underway, and we lost the pattern of a higher low every day for a bunch of days, and we are looking for a daily higher low. Uranium has been on fire, and the plays based off of uranium, a lot of them are on the OTC, but they've been on fire as well, and Reddit and Wall Street bets are jumping on it as well. There's a lot of fundamental case behind it, and shout out to the members holding down our commodity chat room because they have been all over it before this breakout took place. We were watching this monthly bull flag off EMA 12 support that followed through in a big way. But at this point, we're scouting a daily high or low, and I'm personally watching for an hourly back burner bounce. I might not get it. We would have to break the low of today tomorrow for hourly RSI to approach oversold. And at that point, daily EMA 12 will be coming into play. And I love when an hourly back burner aligns with daily EMA 12 support. I might not get it. If the bulls hold 2365 and break 25, we confirm an hourly trend change back to the bulls, and our daily higher low is very quickly set. And again, it's a possible daily bull flag at this point. So another name is UUUU, smaller cap name, and actually got some follow through today. It had a bull flag previously, but just watch this sector for both directions. There is plenty of volatility for traders in both directions. I mean, look at this pullback into the end of the day today. That's a 5% plus pullback on just hourly consolidation. So it's very high risk, high reward, but that's where the volatility is at recently. And as a day trader, I scout out where the volatility is. So I've been scouting and just watching CCJ trade the past couple of days, getting familiarized with it, and watching to see if the trade comes to me for hourly oversold conditions or not. Do good things. Have a good day. Thanks for tuning in. Like, subscribe, tell your friends. See you tomorrow. The marigolds are taking a long time to flower. And I may have showed this in another video. This orange, what I thought was a fungus, where it just takes over everything and chokes it out. But I don't think it's a fungus.
because I'm pretty sure these are little flowers. So this might be just a plant, unless these are some kind of spore sacs. I've got to ask. There's a good Facebook group in the area regarding plants, and they'll know. My favorite weeds that flower, I guess weeds would just mean any natural plant in the area, native, are these cardinals, and I forget if this is goldenrod or golden seal. I get them mixed up. But they just pop up all over, and so anywhere that they're popping up, I'm just letting grow out and not mowing, with the hope that next year around there'll be even more. So that means a lot of long grass. Leaves are just starting to fall. Plant some stuff in the greenhouse next month.